Hey everyone, Lee Lowell here from smartoptionseller.com. Now, if you're an options trader and you're just, flying by the seat of your pants and you're not making much money and you're taking, one step forward, two steps back, and you just feel like you can't get it going, you can't get your options trading to the level where you want it to be. You're just blindly buying calls or buying puts. You really don't have a plan. You can't figure out what to do to be long-term successful in the options market. Well, in this video, I'm going to talk about one concept, one secret indicator, if you want to use it that way, that's going to help up your game, that's going to help you see the options trading world in a whole new format. And the big secret is it comes down to one word: probability. Why probability? Because in the options market, the only way for you to be long-term successful is that you have to figure out where a stock is going to be by a certain date in order for your option position to be profitable. There's no other way around it. All options have an expiration date. So if you're buying options, that stock, and if you're holding that option until the expiration date, that stock has to move to a certain level by the certain date in order for you to be profitable. Okay, so it all comes down to the word probability. And what do I mean by that? I mean, what is the probability of this stock being at this price by this date? That's it. That's really the secret of long-term options trading, specifically if you're going to be, trading more than 1 day or 1 week options. I'm talking about options what you're holding on for a month, 2 months, 3 months, whatever. If you're day trading like in and out within minutes of time, then it's so random. It's really hard to figure out which way a stock's going to go. But if you can do it that way, if you're a day trader and you can keep up that momentum and keep that emotional roller coaster in check, then more power to you. I can't do that. But what I'm talking about is longer term trading, holding on to positions for a while, and really figuring out what your odds are of success, or in other words, probability. Okay, so let's take a look at some probability numbers and let me show you some things that can really help you with your options trading game. Okay, so let me make myself a little bit smaller here. What we're going to do here today is we're going to concentrate on Apple stock, and we're just going to use that as our example. And I'm going to show you all about probability. And one of the other indicators, or one of the things that we're going to talk about today, is delta. Okay, that's the only other thing you need to worry about. Delta is a byproduct of the options trading pricing model, and delta is really a percentage number that has a couple different definitions. Number one, delta will tell you how much the option price will move in conjunction to the move in the stock. But the other way you can look at the delta, and it's the way that we're going to talk about today, the delta will also tell you what your probability is of the option being in the money at expiration. Okay, don't confuse delta with the probability of you being profitable. It's just the probability of the option that you're holding is going to be in the money. Okay, so I'm going to show you a couple things here and give you an idea of why probability is such an important element, or the secret to really understanding how the options market works. Okay, so we're looking at Apple here, and let's just say we're bullish on Apple, and we want to buy some call options. Buying call options is a very bullish strategy. You want to take advantage of Apple going higher in the future, and so you want to buy some call options because it's a bullish strategy. But the thing here is that you don't really know how far Apple's going to move higher. You don't know how fast Apple's going to move higher, and you really don't know where Apple's going to be in a certain amount of time. Most novice option traders just think, I think Apple's going higher. I'm just going to buy some call options and hope that it works out. Without giving any thought to the probability or how high Apple's going to go. In the options market, speed is very important. And by that I mean, how fast can Apple move higher? How fast is it going to go from point A to point B? That's very important, because since all options have an expiration date, the move has to occur. And the faster that the move occurs, the faster you can make money. If that move happens very slowly over time, your option contract's not going to gain a lot of value, considering that most people buy cheaper out of the money options. And those are the options that, if the stock's here, you think the stock's going to go up here, you're going to buy this strike price. And those are really cheap. And if the stock doesn't move that far, you're going to lose the investment. All right. So let's talk about probability and why that's so important with the options market. So let's just say, Apple's here trading $188 and change, and we think Apple's going to move higher in the future. Sometime in the future, we just think it's going to go higher. How do we know what kind of probability we can get when we're looking at options to choose which call options we should buy, and what are our chances of winning with those options? So let's quickly pull up our option chain here. And this is the option chain in Interactive Brokers. Interactive Brokers is one of the mainstream brokers in the options world. I use Interactive Brokers. If you want to get some information on them, in the description below this video, I have a link there for Interactive Brokers. You can click on that if you don't already use Interactive Brokers as your broker. So this is the option chain. We already have Apple options pulled up here. We're gonna go out to the June 2024 options that expire in 155 days. Now, up here you can see the price of Apple. It's about 100. Now this is trading is currently happening right now. This is in the aftermarket. So Apple's, a little bit under $188 a share. Let's just say you're bullish and you want to buy some call options because you think Apple's going higher. How do you know what the chances are of you being profitable? If you just think, I'm just going to buy some call options and I hope I'm going to be right. Well, delta, as I mentioned, is this number here. If you have an options chain in your broker, which you probably should, the options platform, make sure you have the delta column. Okay, make sure the delta column is there. Deltas range from 0 to 100, 0% to 100%. And that's going to tell you the chances are of that stock getting, moving enough to make your option in the money. And in the money means that option is going to have value that at the end of the expiration period, you can either sell that option, hopefully for a profit because it will still have value, or you can exercise the option, turn the option into shares of stock. Now we're talking about call options here. All right. So any option that is at the money, which means the strike price is close to the current price of the stock, should have roughly a 50% delta. Okay. So let's look at the 185 or 190 call options. Okay, here's the strike prices. Call options are on the left here. So if we look at the delta column, the 185 calls, which are currently in the money by a little bit, have a 63.6% delta, and the 190 calls have a 56.5% delta, these two right here. So in a nutshell, what that is saying is by the expiration date of June 21st, 2024, there's a 50 to 60% chance that Apple will be, within the range here between $185 to $190 per share. Okay, you have a 50-50 chance. Apple's right here right now at 187. So by the expiration date, there's a 50 to 60% chance it's still going to be there. Now, and those options are worth roughly, almost $1,500 for the 185 calls, and the 190 calls cost about $1,200. All right. So basically what you're saying is you need Apple to go higher. And how high do you need Apple to go? Well, what you do is you add the option price to the strike price to figure out where your break even is. The break even price is very important. Okay. So let's just say you bought the 190 calls because you think Apple's going to go above 190. You have to add the option price to it, which is $1,200 or $12 to 190. So that's $202 per share. 190 plus 12 is 202. So really from $188, you need Apple to go above $202 just to break even. All right. So if you look to see at 210, now the delta is about 26.6%. So basically to hit your break even, above 210, you need to go to 212. You've got somewhere about a 25% probability that Apple's going to get up to $212 in the next 155 days. Okay, so it's all about probability. Do you want to take a chance with an option that has maybe 25% chance of winning? Now, how can we go a little deeper into this probability analysis? So one thing we can do is we can use what we have on our website as a probability calculator. And I'm also going to show you some other interesting things that you can look at within Interactive Brokers. So let's just put in some numbers here and figure out and we can show you what the probability calculator can do for you. So what we do is we put in $108 per share, and let's go back to what's the expiration date, June 155 days. So we can put in the 155 right here, and it'll change the date here. You can either change the date or change the time. And the future volatility. Now this is one of the most important numbers here. Future volatility is a number, it's a percentage number that tells you how Apple stock has fluctuated in the past and is expected to fluctuate in the future. Probability does not take direction into consideration, doesn't take into consideration what people think about Apple. It has no idea what Apple does. It doesn't know what products it makes. All the probability calculator does is take that volatility number, the erraticness of Apple, and it puts it into the formula. That's all it needs to know, and it'll spit out a number that will tell you, based on its past movements, how it's expected to move in the future and whether it can get to the level that you need it to get to. All right. So how do we find out the volatility of Apple? So what you can also do is go to a website. I'm going to bring this up as well. If you go to the optionseducation.org website, I've talked about this website before. It's a free website. It's got great free tools on it. If you go to optionseducation.org, here's up here in my mouse. And what you're going to want to do is you're going to click on this Explore tab, and it's going to bring up another page. I'll click on it right now. And what you want to do over here under Option Quotes and Calculators, click on Historical and Implied Volatility. Okay, it's going to bring up another page. Now, if you don't have, it's free. You might have to sign up for the free membership. Okay, so it'll bring up a little data sheet here. What we're going to do is put in Apple. Okay, what we want to do and then is click on the chart here. So it's going to bring up this chart down here. This is a volatility chart. This is a very interesting tool. It's got the 30-day historical volatility and the 30-day implied volatility. That's what IV stands for. And it maps it out over 1 year's time. This is a 1-year look back period based on 30 days worth of trading. It's a 30 days rolling number. Every 30 days it takes calculations. Okay, so the blue line here is the actual movements of Apple stock, how erratic it has been. And the orange line is the expected range that the stock is expected to move in the future. Most of the time, both volatilities will move in tandem, except when you got some certain things here. You can see it diverges from each other. But right here, the current levels, the historical volatility is about 20%, and the implied volatility is probably about 23%. All right, so you put that number back in the calculator. We're going to go back to our calculator here. And we're going to put in 23%. You just have to type in the number 23. So what we want to know is if our break even's at 212, we want to know what the odds are, what the probability of Apple getting up to $212 within 155 days. Okay, so we click on Go, and basically, I had told you earlier there was maybe about a 25% chance of Apple getting above 212. Well, here, if you look at these two bottom boxes right here, finishing above highest target. So you really want Apple to get above 212 because then you'll be in the money, you'll be making money, but it has to be above 212. That's your break-even point. So there's only about a 21% chance of Apple getting above and staying above 212 in 155 days. All right. So now there's a chance that it could get up to that level earlier than the expiration date. But since most people like to hold on to the trades until expiration, we want to focus on the bottom boxes here. And there's a 78.8% chance that Apple's not going to get above your break even. So right now, you're already dealing with a trade that potentially only has a 21% chance of being profitable. All right. So you may want to think about, do you want to an option that's got more of a chance to be a winner. All right, so what you can do is when you go back to the option chain, as I said, the delta tells you the probability of the stock, getting to a certain level. Now, if you want more of a chance, if you choose, let's just say if you bought you can buy, a deeper in the money strike. Let's just say you bought the 160 calls that cost about $34. So that would take your break even up to about 194. 160 plus 34 is 194. So Apple really only has to get up about $6 per share. So we go back to the probability calculator and we put in 194. We're going to use 194 as our new break even. 194, 194, and then we click go. So now you see you have almost, over 41% chance. You have a higher odds of that trade being profitable for you. At the same time, though, the option costs more. It's a $3,400 investment versus the 190 calls, which cost $1,200. So there's a trade-off involved. You're paying more to have a higher probability of having a profitable trade. Which one do you want to choose? Okay. Now, if you're a real cheapie and you just, you only want to put in a little bit of money, you can, buy these, these 230 calls for less than $1. These 230 calls are, 85 cents. Or if let's just say you're a shorter term trader, let's go out to February, which has only got 29 days left. See here? Now, in this case, you can buy let's say the 190 calls again. That'll only cost you $4.50. 190 plus 450 is 194 and a half. So yes, the break even is a lot lower. Apple only has to go up to 194 and a half, but now you only have 29 days for that to happen. So let's go back to the probability calculator and see what happens. Put in 29 days here. And we're just going to put we're going to make this 194 and a half because I think that's what the break-even price was, 194 and a half. And you only have 29 days now. Let's see what the probability is. All right, so you got a 30% chance now that Apple can get above 194 and a half in the next 29 days. That's not so bad. So you really want to understand what your odds are. Now, for us here at the Smart Option Seller, we're all about not trying to figure out where the stock's going to move to. We're here to figure out where the stock won't move to. So if we look back at our chart of Apple, we're bullish. So we think the stock's going to move higher, but we'd rather pick a level down here where we think Apple is not going to fall to. Okay. We sell put options at the Smart Option Seller. Selling put options is a bullish strategy. So instead of trying to figure out how high and how far Apple's going to go, we would rather figure out how far Apple is not going to fall to. Now we can go back to the option chain here. I'm going to show you that page in a minute. Now let's just say we want to sell put options on Apple, and let's say we're looking at let's go out to April, 90 days. And we want to sell a put option that's got, at least worth 25 cents a contract. There's 135 put right here. It's worth 26 cents. Okay. So what are the chances of Apple falling down to $135 in the next 92 days? Well, put 92 days in here. We keep the volatility of 23, and $135 is our target. And Apple's at 188 now. What are the chances of it falling over $50 a share in the next 92 days? Less than 1% chance. So for us, we have a 99.8% chance of winning on this trade, meaning Apple's not going to fall all the way down to 135. So we're always guessing where Apple's not going to go. All right, so that's our probability. When you sell options, especially the way that we do it, we sell out of the money options. We can have a very high probability of success. All right, so let me show you some other information. If you do use Interactive Brokers, they also have some cool tools here. This is called their Volatility Lab. Okay, so when you pull up the Volatility Lab, let me show you how you do this if you have Interactive Brokers, you go to the main screen here, and under Trading Tools, probably can't see it on the screen here. You click on Trading Tools and it has all these option tools right here. It's the Volatility Lab. Okay, so you click on that and it's going to bring up this screen here. Let me move myself down here a little bit. So really what you want to concentrate on is this chart up here. This is the volatility chart, and down here you have a couple tabs: implied volatility, historical volatility. So this is the implied volatility. Let's get back into Apple here. Okay. So what this chart does for you here is implied volatility, and you can click on, each month has a different implied volatility. So it's got January, February, and March implied volatility marked up here, color coded here. And you can see they're all within like the low 20s here. This is this is a 2-month period. So if we want to look at a 1 year look back period, okay, we can see, where implied volatility here's the stock price here, this shaded thing here, and these are the volatility numbers. You can see Apple's volatility has trended lower over the last year. That means it hasn't fluctuated. Its fluctuations has gotten smaller as the year has progressed. Now, you can take off these, and you can look at one contract to make it a little bit easier. So this is March's implied volatility, and it's in the low 20s here. Now we can kind of compare it to the chart that we had from the optionseducation.org website. Now the optionseducation.org website is uses the current. So if we go to January and take off March here, and we pull that chart back up, the implied volatility number should be roughly looking the same here. You can see the implied volatility is the orange graph here. So it kind of has that same pattern. You can see this little section, this big drop right here, coincides with this big drop right here. So it's pretty much the same. Now you can also change it to the historical volatility for Apple. Let me move over here, and we can bring up the chart again. Now we can look at the historical, 30-day historical. We can take the implied volatility off, just uncheck the box here. I'm sorry, bring this up again. So you can see that the historical is the blue line here, and you can see how the pattern matches up with what you see here. Now, this little section here between, September is this same little pattern. You can see it right there. And this little down move is this section right here. So the charts are pretty much the same. Historical volatility is based on actual movements of the stock. Okay, so this historical volatility chart and this historical volatility chart over the 1 year time frame, which they both are, should look exactly the same. It's the blue line here, which is historical, and it's this orange line here. So these are the numbers that you can use. If you don't want to go to the optionseducation.org website, you can, and if you have Interactive Brokers, you can look at these charts here. And like I said, you can put in some other days. You can put in 100-day historical volatility, and it'll show you what's been happening. And you can go back to the implied volatility, and you can put in a couple. You can look at the first 3 months. Or if you want, you can go to, you can use this thing here, and we can put June if we want to, and get rid of the others. And, you can just look at, now this is like a 5-month volatility chart just for June. So it's got some cool stuff. Also, if we go back to the option chain, one of the easiest things you can do as well is that you can look at this IV number right here. So if you're looking at April options, a 90-day option, 20.2% you can use in the probability calculator, okay? So we can always change this to 20.2 if we want, to get numbers that kind of match up with what Interactive Brokers is showing. All right, it doesn't change it all that much. But anyway, so it's all about the odds and all about the probabilities. what are your chances of, the stock moving from point A to point B in X amount of time? Now, we like to use the probability calculator. You can get this on our website. If you go to our website and look under the services tab, it's under the calculator purchase. It's very cheap on a monthly basis, or you can use the free stuff at optionseducation.org or Interactive Brokers if you use them. Like I said, we're all about put selling. That's what we do. So we like to use the calculator for a lot of these what if scenarios. You can always change the volatility. If you have an idea what volatility is and it's not matching up to the things that you're seeing online, you can put it in whatever you want, and you can always change the targets. So it's very useful. You can do a lot of what if scenarios. Okay, but to get that information, you can either go to the optionseducation.org website, Interactive Brokers, and just look at the implied and historical volatility charts. So it's all about figuring out what your chances are of the stock moving from point A to point B. So if you're just kind of floundering and you just can't get a handle on which strike prices to choose, look at the deltas. The deltas are built in. That tells you the probability right there. All right. So you can use that as a quick and easy way to figure out your probabilities of the stock getting to a certain point as well. I can guarantee you, by using the delta and looking at probability numbers, it's going to help you with your option trading. You're going to get into trades that have a higher probability of success. If you're buying options, it may cost you more to get that higher probability, but you're gonna have your win rates are gonna go up, because the stock is going to only need to move a little bit of money, in that time frame in order for you to be profitable. Yes, you're probably going to have to pay more for the option, but what do you want to do? Do you want to win more and have it cost a little bit more money, or would you want to be a cheapie and spend a little bit of money but lose a lot? So for us, as I said, we're option sellers. So we like to have the really high probabilities of winning, and we have those smaller payouts when we sell put options. Now, if you want to learn a little bit more about what we do, you can go to our services tab here. We have our 2 newsletters, Smart Option Seller and the Vertical Spread Trader. It's all about selling put options, selling put option credit spreads. If you want to learn more about what put selling is all about, click on our free ebook right here. You can, Put Selling Basics is the ebook that I wrote, all about put selling, what it is and why we love it. Put in your name and email address, and we'll send you back an email for a link to the free copy. All right. So remember, delta, probability, your odds, volatility, it's all about helping you get a leg up and doing a little bit of math here, looking at some of the numbers and, just giving yourself another tool in your toolbox to become a better profitable options trader. All right. So I hope this has been helpful. Give me a thumbs up, give me a like. Don't forget to subscribe, hit that red subscribe button. Leave me a comment below. Email me if you need to. I'll always answer your emails. And, I hope this has been helpful for you. Do these free videos for the community. And that's about it. All right. This is Lee Lowell signing off.